Now, Workhorse, their estimated earnings per share on Monday morning, okay, are at 11 cents. And I don't want to get anybody's hopes up, so let's not do that. I think there's a lot of hype surrounding around Workhorse, and if there is one speculative play that I like in the EV space, it's going to be Workhorse. Workhorse and SPAC. I like Workhorse a little bit more than SPAC or Fisker, because Workhorse actually has products and they're backed by the government and they're going to get more government support here more than likely. But I think they very well could miss earnings. Now, that being said, which I need to come up with a saying as far as that being said. You guys pick on me a lot about saying that a lot, and I just realized that I say that a ton. But I think that it's going to be interesting to watch to see how this develops. It's not going to be so much about whether or not they beat earnings, I don't think. By the way, if you want to see where I'm looking at here, this platform that I'm using, it's WeTrade HQ. It's a platform that I built with my partner, Jake. It is just a really good platform if you want to find good information. You can get all of your financials, all the expected earnings. They're all here. Filings, all that good stuff. There's even a forum where you guys can chat about it. But Workhorse here, I think, could potentially pull back to around $15. If the earnings don't come out and it's in a positive light, it could tank below that $15 range. If it goes below $15, it could be a lookout below situation. So I want you guys to be careful about this. This is Stock Watch Sunday. It's not Stock Buy Sunday, right? So this is a watch and wait and see. If Workhorse comes out and says, hey, you know what, we're moving forward with the USPS deal, which if you guys aren't familiar with, United States Postal Service is going to potentially partner with Workhorse. UPS already has on electric vehicles. It's going to be if you're a mail carrier out there, Workhorse could potentially be your next LLV, vehicle. So Workhorse, I think, is very much in the mix here. It'll be interesting to see how this all plays out. But I want you guys to be very cautious about this. I know there's a lot of you guys in there because there's a lot of hype around it because EVs are hot and it's nice and cheap and it's gone up a ton. I do like the fact that it's held up over here around into and kind of developed a little bit of a channel here between $17 and $15 a share. But if it breaks below $15 a share and the earnings report comes out tomorrow morning before market open and doesn't give us good news, then it's not going to be good for Workhorse. So just be careful, manage your risk, and that's going to be something that you really want to pay attention to. Here's another new cool little feature, by the way. If you guys come over to WeTrade HQ and you want to know if something's got earnings, it's already up here. Look at that. Isn't that some cool shit? My partner, Jake, man, he's awesome. Shout out, Jake, if you're watching. So if you guys are interested about earnings plays, we'll have earnings calendars here now. So it's going to be, it's pretty awesome. Come over to WeTrade HQ. It's free to use. So that's Workhorse. Like I said, I don't have like a whole lot to tell you about Workhorse, where I think it's going. I think it's just a watch, wait, and see because nobody knows. Nobody has a clue where this is going. And if somebody tells you that otherwise, then they don't have a clue where it's going. Like they don't have a clue what they're talking about. So just be careful is all I'm saying. You look at your area support here is $15. If it falls below that, it could very likely fall much further than that. If by some chance they have good news, then look for this to break up above $20 a share. I think it could definitely do that if it comes out with good earnings. Good earnings and a good outlook is what we're looking for in Workhorse. Okay? Moving forward, we got Twitter. Twitter is going to be one to definitely watch out for. Here's why. Wall Street Journal has reported that TikTok and Twitter have held talks about potential merger, even as the video sharing company defends itself against President Trump, because he's obviously written an executive order to ban it. But now I think it's within 35 days or so, 37 days. So that's, the only thing that's going to save TikTok is if they merge with an American company because, they're primarily Chinese. So if they merge with an American company, and Microsoft is also one of the front runners here. But if Twitter gets in the mix, it could be huge for Twitter. So I definitely would be watching out for this one come tomorrow. It's got a pretty solid support here on the daily chart at $35 per share. If this breaks up above $40 a share, it could get real nice. This thing could move really, really nicely if it gets up above $40 a share. I think it could potentially do that based off of a lot of hype that might be surrounded around the fact that they have been in actual talks. So I think it's going to be very, very interesting to see if this actually plays out. And so that's going to lead me to the next stock that we're watching, which is FSLY. Now, we've already talked about FSLY, why it's tanked already. And the reason that I'm pairing these two together, Twitter and FSLY, is because we've already talked about how TikTok is a major client of FSLY. 12% of their revenue this past quarter came from TikTok. That's why it tanked, because people are afraid. In my opinion, now is not the time to panic over FSLY's swift drop. I think the kicker here is that if Twitter actually does end up buying them out or merging with TikTok, guess who else is a client of FSLY? It's Twitter. That would be huge. That would be huge. I think that it would be interesting to see that if Microsoft actually ends up taking over, there's going to be a what if situation here with FSLY, because if Microsoft decides, no, we don't want to use your services, as we take over this company, then it could be a blow to FSLY. But my thing is, it's not just all about TikTok. And it goes back to me talking about remote work and how FSLY has been able to help a lot of other clients in the remote work space, and that they're only going to increase in demand. Their clients don't just include TikTok. It's Business Insider, BuzzFeed, Twitter, as we discussed, Shopify, Stripe, Airbnb, and a shit ton of other ones. So it's not just all about TikTok here. It doesn't deserve to be down this low. I've said since the beginning that the stocks that have not only survived but thrived through the Rona, through the crash, through the worst economic contraction we've ever seen, that those companies deserve to have higher valuations, and FSLY falls right into that. They've doubled their growth on the business side. They've doubled their growth. The stock went up crazy. It deserved to come back down a little bit because of the TikTok stuff, but for it to come down this much doesn't make any sense. It has settled down here right around 70. It came down around $72, and that seems to be right where its support is, and then ended up kind of bouncing off of that on Friday, closing at 79.33. I think that this is still very much worth buying the dip on, and right around in this area where it's sitting in the 70s seems to be a reasonable place to add the dip to. Or if you're not even in FSLY, could be a good opportunity to start scaling yourself into a position, because I don't think FSLY is going anywhere anytime soon, and they deserve to be higher than what they are. I've called both times they were going to hit up over $100 per share. I don't think $100 per share happens this week, but I think it probably very well could happen before the end of the year again. So will it go up this week to $100 a share? I think it just remains to be seen. There's a lot of things in the balance. If Twitter says, yeah, we'll take them, then FSLY will go crazy. It should. So in my opinion, FSLY still very much a buy. Don't freak out. It's not the time to panic. Okay. Next is going to be Apple. What else can I say about this thing? Okay, so here's the thing about Apple. Apple has come back down to earth for a little bit. The thing about Apple is that it needed to pull back a little bit. It got a little hot, so this is the channel that it's been kind of falling into here. This is on the daily chart again over at WeTradeHQ.com. Come check it out. This is a one that I think is going to be worth taking a look at, because it has just bounced off of its support yet again. So it came down here to around the 444 area. I'm sorry, no, this is 1 minute chart. So it came back down. So all day on Friday, came back down to this 444 area, and it kept repeating it all day and all day on Thursday as well. And so I think this is going to be a good spot to grab it at 444. Look, at the end of the day, you don't trade Apple, in my opinion. Just keep buying it up before the split. In my opinion, if I've had a lot of questions about this, should I own this before the split? Should I own this after the split? And I say just own it. Okay, it doesn't really matter. If I had a choice, it would be pre-split, because then you'll have double the shares, and more than likely you're going to see a rush of buying coming in after the stock becomes quote unquote more affordable. But at the end of the day, it's one of those things that It's Apple, for crying out loud. They got the iPhone 12 coming up early fall. Rumor has it it's going to be badass, and we all know that Apple historically runs into that type of an event. So owning it before all of that, before the split, before the iPhone 12 comes out. Here's the other thing. I don't know if you guys have been watching some of the videos I've been putting out about Apple, but there's been 4 times that Apple has split. And this will be the 5th one. All of those times it has ran into the split over its 44-year history, except for the dot-com bubble. And nothing was immune in during the dot-com bubble. Nothing. So Apple, I think, is very much a clear buy here. I think it continues to go up. Sean, what's up, my man? Welcome to the Chaos Crew. Happy to have you. We'll see you tomorrow. So, yeah. So anyhow, I know I had a lot of questions about Apple. Should I buy the dip? Just buy it. Just freaking buy it. So that's all I have to say about that. All right. Next, Penn National. My God. Holy hell. So during Penn's second quarter earnings call, which happened a couple of days ago, which, by the way, they absolutely crushed, all but 2 of the company's 41 gaming properties were in some form of operation, according to their CEO during the conference call. This does continue to go up, but I think it does pull back here. I like it at the $40 range, and I think it does come back. The majority of their locations that are open are at least 50% capacity. They have a lot of cash on hand. Yes, they got some debt, but they'll be fine. Penn is making tons of money. I know Barstool's happy. If you guys are catching Dave Portnoy on Twitter, he had a good week last week, and anybody did if you were a Penn National holder. So I think Penn's worth a watch. I think it continues to go up, but I like this for a pullback around $40 a share. Just unbelievable move. I can't believe how much this went up over the last couple of days, and what a monster it's just been since the crash. I mean, all the way down $3 a share, and now it's sitting at nearly 50. The more that their locations continue to open, and the outlook that they have is very positive, despite everything else. I think Penn's definitely one to watch for. Like I said, pulls back to $40 a share, in my opinion, at some point this week, and then continues to go up from there. So if you're not in Penn, that's where I'll be watching it. If you're looking for a pullback to maybe add to some of your position, that could be one that makes a lot of sense. And there you have the top 5 stocks to watch this week. Boom!